Hello, I'm Stephen Galpin and welcome to Property Matters Election Special. Now this is one of a three-part series where we're talking to property professionals, particularly in the world of development and finance, looking at their frustrations pre the election and what their hopes and aspirations are after the election. So joining me today are Leo Del Rosso, Senior Lending Manager at Commercial Acceptances, part of the Close Brothers Group. Hope I got that right.
Perfect.
Good. Well, welcome to you.
Thank you.
And joining Leo is Ian Humphreys, CEO and Founder of Brickflow, a digital marketplace for specialist finance. Hope I got that one right too.
You have, Stephen.
Good.
Thank
Great
you.
stuff. Okay. Well, look, in this first half, what I'd like to do, I think I'll start with you, Ian. I should explain that Ian has got a digital platform in which they try and match lenders with borrowers, with brokers. In other words, coordinating the whole process if you're struggling a little bit as to where to go, I suppose. And what we should remember is that if developers can't get finance, we don't solve the housing crisis, do we?
Absolutely, yeah.
What are some of the difficulties you've experienced to date?
I think the general nature of the industry has been opaqueness. So there's been a real struggle in the past for people to find best value quickly. I think the thing that people perhaps don't always understand is that the way metrics work on a value add loan, a bridging or development loan, generally they're quite complex per lender. So every property or every project that you have will be funded differently by each lender. So the default scenario of going back to the same lender each time just doesn't create best value for the borrower. And when I say best value, it's the interest rate, but it's also inefficient equity deployment. So that's a real killer, I think, for most SME developers, is that ability to put in the right amount of equity into each deal rather than the amount the lender wants. There'll always be a scenario where you can probably minimize your equity input.
But if you have that conversation with a lender, you're going to lose, aren't you? Because it's the lender's money.
Yes, but the point being is that when you look across multiple lenders, you're able to extract that best value.
Right. Okay.
Whereas by sort of dealing with one or two lenders, you're very fixed in terms of your equity input.
I think it's funny, isn't it? I mean, I think back to the days when building societies were the foremost provider of, shall we say, retail finance, and you were brought up to believe that creating that and keeping that association, that loyalty to your lender, etc. And so I can remember having, with one particular building society, probably had 4 or 5 mortgages over the years, and it was so easy because you just went back as an existing customer. But that loyalty's gone from the retail market now, hasn't it? It's very much a sort of broker-driven exercise as to where you go, and it seems what you're saying is the same as very much in development.
I think there will always be some value in people being able to go back to somewhere they know. I think more so in development, where you draw an initial amount of funding to fund the land, but then you also have ongoing tranches of funding to fund the build.
But I suppose that business of loyalty gets difficult because in today's world, we are talking about a greater number of very specialist lenders, aren't we? We're talking bridge, we're talking, short-term, long-term, development, non-development. Some do developments with commercial aspects to them, some won't.
I think the biggest issue you have is really the short-term nature of tenor in a particular institution. So you might deal with somebody on development 1, but then by development 2, they've moved on either within the business or to a new funder. But I think also as well, that centralised decision making. So back to when you were talking, perhaps the building society, you probably had a local manager that had a remit to be able to lend up to a certain level. That's kind of been removed now. You tend to find everything centralised, and so that lack of accountability and lack of being able to make a difference by the person you're speaking to.
I think you're absolutely right. I mean, I can remember going back years and years. I mean, your local building society manager probably knew more about you than you did. You know, he knew about where you worked, what the prospect was for that factory or wherever it was you were working. He probably knew the builder who was doing the housing estate, and you know, was a real expert on.
We probably had the order book for the company you worked at, right?
Yeah.
So he knew the prospects.
Possibly so. Yeah. Okay, Leo. Well, you're a guy that hands out the money. So, what have you got to say about it?
Yeah, I think. I mean, the equity point's an interesting point, and I think as the sales market has slowed over the last 12, 18 months or so, the amount of equity that developers have to put into a new project has fallen because that equity is not being recycled. So I think that is key. I think, you know, one of the biggest issues we see is really around the whole planning industry, obviously where planning and the delays to planning is coming in, not just on initial application, but also once a loan is agreed and even drawn down at the start. It's about even getting pre-commencement conditions signed off. Those are taking so long at the moment. It's delaying builders by starting by 3, 6, 9 months, a year even. And fundamentally that delays them starting, delays them building, delays them finishing. So the amount of stock that's coming onto the market really slows down.
It's funny, the developers we have in here and individuals, especially on starting on that journey of development, the one thing they forget is time. You know, they don't realise that time costs so much money, and a delay in, as you say, planning or something of that nature. But there's another factor, isn't there, which we're having to cope with at the moment, which is really volatile prices in building materials. As a lender, how sympathetic are you to, what shall we say, ever rising prices? I mean, look outside at one of these buildings, probably £750 million GDV, 3-year project coming out of the ground perhaps, or 2.5 perhaps. How sympathetic are you to price rises in materials halfway through? I mean, it's a difficult one, isn't it?
I mean, we've been lucky over the last few months. It seems to have stabilised a bit now. There's a bit more certainty has come into pricing. But obviously prior to that, coming out of COVID, prices went up dramatically. So I think as a lender and as a developer, you've got to build in those contingencies up front to make sure it gives yourself some fat in there to cover anything that comes up. But I think you have to be, as a kind of any good lender in there, will work with the client to go through price increases and to support that. Because fundamentally, for the developer, for the lender, for all parties involved, it's getting the development finished.
Yeah.
And if you're unable to do that, then it's no good to anyone. So yeah, you have to 100% work with them.
Just falls flat, doesn't it?
Yeah.
Okay, Ian, if you were to listen to a lot of solicitors at the moment, when criticised about long completion times and things like that, 2 factors. One is the collation of so much information, but what's behind that, the reasoning behind that, is that lenders are becoming more and more demanding in terms of the searches, the information, the data that they're given. Now that's in a retail market. Do you find that the commercial finance element of the industry is also that demanding?
Yes.
Is it ever increasing?
Yeah, absolutely. I think it's a real problem at the moment for everyone in the industry. So I think most of it's born out of caution. So you have a cautious lender that then transmits to a cautious valuer, a cautious quantity surveyor for its development, and then obviously the lawyers are cautious on the back of it. I do think there is still a lot of home working, which I don't think is helping matters. But ultimately, what you tend to find in the industry is that most of the specialist lenders are funded by the same institutional funding lines. So there might only be 5 or 10 banks that are funding 100 different lenders. So you're ultimately borrowing from the same institution. So they'll all have the same requirements. And what you tend to also find as well is that there'll be an audit each year done by the institution's lawyers that will ascertain where they've gone wrong previously. And then they put in a new provision or new caveat into the contract to stop that happening again. And that's just ever increasing.
Leo, I'm going to throw this at you, not because I think it's particularly applicable to your business, but generally across the industry. Ian mentioned valuers. Mm-hmm. Now, I've consulted on developments for the last heaven knows how many years, but I have. And my biggest fight, I seem to have spent my entire life fighting valuers. And having analysed who these valuers are, you get the professionals that I would say that are firms of chartered surveyors who take life very seriously. But we've inherited a brand of valuers that are huge digital commercial entities who tend to offer banks a very cheap valuation service, but of course it's designed to go nowhere near their professional indemnity insurance, so they tend to undervalue. And one of the complaints that you hear right through the industry, from retail to development, is the valuers downvalued my stuff. And one, it's because they're a little bit frightened of getting sued if they get it wrong, but also that what they've done is start to do things like desktop valuations, drive-by valuations, everything but look at the property. And I wondered what your view about that is, whether it's a good discipline, it's creating cheaper valuations, or really whether it's quite dangerous.
I think it's really driven by the lender market. There's so many lenders out there now in the bridging and development finance market that certain lenders are having to differentiate themselves, not just by pricing now or possibly leverage, but also by the service they offer. So by offering desktop valuations or drive-by valuations, which, in my opinion, is no replacement for a proper valuation conducted by a proper surveyor. But that's really being driven by how competitive the market is, and you can't always differentiate on price. But I agree, it's a really difficult job, the valuer's job, and they're never going to win probably, because either the lender or the client is going to have a go at them. But I think making sure as a lender that your valuation panel is the best it can be is so much more important, because it's an extension of our business, really, and the same as with the lawyers and with our quantity surveyors. And if they're not right and they're not providing the right service, then it stops the lending process up front.
Okay, well look, that's all we've got time for in this half of the show, so join me again after the break when we'll be discussing things further with Leo and Ian, and we'll look to what they hope for the future. Hello and welcome back to part 2 of Property Matters Election Special. So welcome back to Leo and Ian. Welcome back, guys. Right, in this half of the show, let's talk about what we can hope for. We've talked to some of the difficulties that have historically bugged developers and made life difficult for them. And I said in the first half, if we can't get development finance, we can't solve the housing crisis at whatever level that might be. So let's start with you, Ian. What would you like to see a new government bring in?
A couple of things. So I think firstly, the housing minister, role of housing minister should be apolitical. I think if you look at what happened in the recent past, we've had 15, 16 housing ministers over the last 13, 14 years.
10 years.
10 years.
Yeah.
Housing is too an important part of the fabric of society to be political point scoring. So I think the decisions that need to be made cannot be made in the isolation of 4 to 5 year parliament. So I think having an apolitical role, so much like the Bank of England is independent to government, because the decisions it has to make are never going to make you popular. I think housing needs to be the same. It
seems to be one of those jobs, doesn't it? You get it on the way up in the political sort of cycle of things, or on the way down.
It's seen as a stepping stone, I think, isn't it, to other things, and that's really the way it's been treated. People average tenure sort of 9 months or whatever, and what can you do in 9 months? Something that is catastrophically broken. So that would be the first thing I'd like to see. The other thing I'd like to see, I think, and touching on what the topic of this particular programme is obviously funding. If you look at, we're trying not to get too much into numbers, but if you look at where interest rates were a couple of years ago and where they are today, interest rates have moved by 5%. Per million of borrowing, that's £50,000 per year extra interest that's being charged on that borrowing. Okay, with development finance and bridging finance, you're not paying the interest month to month. It's basically part of the loan. So it actually means you have to put in more deposit to build. So a 1 million loan, you have to put an extra 50,000 now to build at the same level. If you look at the construction industry in the UK, it's around about a 9 billion industry. So that's 450 million extra money that developers have to find this year than they would have had to find 2 years ago to build the same number of houses. Okay, so that's an extra burden that's been put on the private sector by the interest rate, increasing interest rates. So what I'd like to see is really the government do similar to what they've done in the sector towards first-time buyers with Help to Buy. So call it Help to Build, where it should be an equity loan to developers, interest-free, which will allow them to develop at the same cadence that they were previously, despite interest rates. Because the problem we have is, as you've identified, we've got a 4.5 million house shortage in the UK, and it's not going to solve itself without this pretty robust government intervention. And interest rates can have such a catastrophic effect on the industry. I think the government needs to think ahead and think, well, if interest rates are going up, if we're reliant on SMEs and house builders to do what we're not doing, then we need to help and plug the gap.
Well, you are reliant on those developers, aren't you? I mean, when we've seen the political leaders come out in the past and say, "Oh, we're going to build 250,000 houses," who's we?
Yeah.
Do you mean the developers?
Exactly.
And if you mean the developers, then first of all, they've got to get the funding to build, and secondly, you should know that a developer will build whatever you want as long as he can feel he can sell the product at the end. And to sell the product at the end, I'm afraid that does mean fairly low equity being put in by people to buy their homes. And I don't see a lot wrong with that. I mean, probably, Leo, you're going to come back at me, but I just go back to the crisis of probably 10, 15 years ago, when some of the banks got in trouble. There was a lot of criticism about 100% mortgages, but actually it wasn't this country that had the problem. It was America, wasn't it? Where they were packaging up mortgages that they'd sold and selling them off as a bundle, really. I mean, that's a simple way.
AAA investment.
Yeah. And they weren't a good deal because they'd just been going around offering money to anybody that could breathe and sort of do it that way. So I think we've got to strike a balance. So come on, Mr. Banker, you tell us.
I think there is still, like you said, there's still a bit of a hangover from that 2008, 2009 and hesitancy to go back to the higher leverage mortgages. But fundamentally, we're not building enough houses in the country. So regardless of the sales part of it, we're not building enough. So how do we get there? Well, I think, going back to your point on the politics, you talked about it on a national level. I think on the council level, the amount of planning permissions that are going to appeal, because local politics is becoming involved with the initial applications. If it has to go to appeal, and a lot of those are then approved at appeal, it takes more time, more money, fundamentally slows down the whole process. So I think you have to take, as best you can, politics out of the local planning process and try and make it based on legislation and the national framework that's coming down from bigger government.
I think you're absolutely right. I think a good national directive to the councils would be welcome. I mean, I've thought for a number of years now, I don't know whether a panel of 12 sort of unqualified councillors is really a good exercise. Look, given the complexities of development today, I mean...
Well, I think just being as subjective as it is as well, you can be in one borough and you can be 4 streets across, but in another borough, and you get a completely different outcome.
Yeah. I mean, I think a national directive would be great. Going back the other way, though, I'm not sure I want national government interfering in local matters, because they're not going to understand fully. So again, it's a balance, isn't it?
think you need just more funding into planning officers, planning caseworkers to go in and
just needs making professional, doesn't it? Really?
Effectively, I think it's so underfunded at the moment that the time frame to get planning and
I can imagine somebody sitting in front of you with a proposition, and then you hear it's just subject to planning, and you're just thinking,
"See you in 12 months." Yeah. It is a bit like that. Yeah.
I do think the planning application fees, I think it's about £624 at the moment for a full planning permission. If you speak to most property developers, they'll happily pay a few £1,000s if it meant that they knew when it would come out the other side.
Well, I think, look. How can you charge £600 and get a competent answer if you're doing a development for £500 million, £750 million? You know, 600 quid.
Yeah.
It's not going to provide the professional viewpoint that you need.
Yeah.
And I mean, I've had to advise people in the past, and I've always said, well, look, don't treat your planning officer as the enemy. Go make friends, go talk to him, go and understand. But because of the constraints on employing people and budgets and all the rest of it, planning officers have become less and less and less, the number. So the accessibility of these people has become less. It's just fueling the problem, isn't it?
And they all leave to go to the private sector and become planning consultants because there's just not the funding, and it's overworked in the public sector. So yeah, definitely need to address it.
I saw another stat recently where it was saying that actually the way that the figures are being manipulated are that the planning decisioning is actually still taking a similar amount of time as it's meant to, sort of 13 weeks. But actually the determination, so when the application is submitted, that's when the clock starts running. But unless they acknowledge the application, then the clock doesn't start. So they'll just let it sit there for 6-9 months. So the actual application end to end is still running to a year. But the government stat, they're still hitting their number. And the other thing as well was Section 106. Apparently it's taking up to 44 weeks now to negotiate a Section 106. And that's only done after the planning decision is originally given. So end to end, you've got something that used to take 13, 16 weeks is now regularly taking a year plus.
But you see, the other thing is you've got this ridiculous system probably out of London where, the thing has to go before the parish council to start with, who've got no authority whatsoever. They can't sanction anything. They're merely a consultative body in effect. And I don't see why they just don't become that to the local authority. If they want to know what villagers think about something happening in their village, that's fine. That's good. That's good politics. But I don't think it's the right idea that it takes probably 6 months to get through that process before it even goes to the determining authority.
I think the biggest problem for investors at the moment is you're buying a site on the current macro environment. And so what you pay for it is based on your build cost, your funding costs, the current GDV. If you're then going through a 2-3 year planning process, your macro environment is completely different. So what you've paid for it today is not what it's worth. Hopefully it might be worth more, but invariably it's not
always.
Right? It's worth less because, as we've just recently seen, interest rates, build costs.
Okay. Right, gentlemen, just 30 seconds each. What would you hope for?
I think stopping the rhetoric, these 300,000 homes a year is the right number, but the actual delivery of that, I just don't think any political party has any idea how they actually do it. So I think getting into the weeds and understanding what's wrong with the system is the only way forward.
Okay, Leo.
More funding for planning system, more funding for apprenticeships going into house building, hopefully try and deal with some of the labour shortages that we're dealing with. And thirdly, adoption more towards modern methods of construction, both from lending and from local councils.
Yes, modular construction.
Yeah.
Super quick, except you guys won't lend the money until it's on site, and the constructors of this modular miracle want it all up front, don't they?
Yeah, it's a difficult.
How do you solve that one?
It's difficult to finance, and I think lenders are just starting to try and get their heads around it now and try and come up with structures, and a few lenders have started to venture into that industry. So hopefully we'll see see it sort of kick off in the next couple of
Right.
years.
Well, on that hopeful note, we'll end the show. So big thank you to Leo Del Rosso. Thank you very much for coming in.
Thank you.
Ian Humphreys, thank you for coming in.
Thanks, Stephen.
Good to see you both. Thank you for watching. I'm Stephen Galpin. Join me again next time on Property Matters.